Hello, welcome to the European Open briefing for Friday, July the 14th. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So yesterday we had Fed Chair Janet Yellen appearing before Congress for a second day in her semi-annual testimony. She once again was a bit more cautious than she had been in her previous appearances. So most analysts interpreted her comments as being on the dovish side, and this of course weighed heavily on the US dollar. Equities on the other hand were boosted by the prospect of US interest rates going up more slowly than anticipated. So the focus now will be on US inflation and retail sales data out later today. We also have some other key US data being released, so it's going to be very important for the markets to watch these data, given the fact that after Yellen's comments this week, the third rate hike this year doesn't appear to be a done deal. In other currencies, we're seeing very strong gains for the Australian and New Zealand dollars. The euro and the pound, though, although they are being supported by the weaker dollar, they seem to be more affected by the euro is being affected by option expiries, while the pound on the other hand is being boosted by short covering. The pound is trading very near the 1.30 level, while the euro seems to be hovering around the 1.14 level. But let's start now with the dollar-yen pair. We can see that dollar has been drifting low this week, although it is off yesterday's lows. It didn't actually fall that much after Yellen spoke yesterday for a second day. We did see the dollar rising above 113.50 yen in early Asian trading before heading back down again. It's now once again approaching the 113 handle. So Yellen yesterday was once again a bit on the cautious side. She said that the risk to inflation are two-sided, although she did add that it's premature to reach the judgment that we're not on the path to 2% inflation over the next couple of years. So this does mean that the Fed, that the next move, or rather the odds of a next third rate hike this year are around 50%. We also had Dallas Fed President Robert Kaplan speaking yesterday. He was also dovish. Said he's actually hadn't been as dovish in previous months. He's slowly become more dovish recently, and he did say he wants to see more evidence of inflation moving towards 2%. So this could, once again, shows that the Fed, the FOMC members, are not as certain about raising rates so soon after the two we've seen already this year. The dollar index, which measures the US dollar against other major currencies, is stuck near 9 months lows. US stocks, though, yesterday we saw the Dow Jones hitting a fresh record high. The S&P 500 and Nasdaq were also up, though didn't manage to reach their previous record highs. And as I said, focus now will be on today's US data later on. Moving on to European currencies, we're seeing the euro not really benefiting much from the dollar's slide on Wednesday and Thursday. It's currently trading at 1.1413. We also saw a Wall Street Journal report saying that the ECB will use the September policy meeting to announce the start of tapering in early 2018, though this didn't really do much to lift the euro because the euro is being pressured by a large number of option expiries. The pound, though, is benefiting from short covering and also to an extent from the weaker dollar and relatively weaker euro. Sterling did hit a one-week high of $1.2965 earlier this morning, but the focus for the pound will be inflation and retail sales data next week, especially now that the Bank of England appears to be considering raising rates at some point this year. Let's move on to the Australian and New Zealand dollars because both currencies were up sharply yesterday. The Aussie has extended those gains today as well. It did hit an 8-month high of 0.7762, and with the RBA now having dropped its easing bias, further improvements in risk appetite could lead to significant appreciation of the Aussie as a rate hike, despite the fact that the rate hike is a long way for the moment. Also supporting the risk sentiment this morning is we did have, other than the dovish Fed, yesterday we had strong trade data out of China, which also boosted the Aussie. But gold, on the other hand, is rather steady. It's moving in narrow ranges despite the big shift in risk sentiment and the weaker dollar. Looking at the New Zealand dollar, it did touch a 5-month high yesterday of 0.7368, but is down today, currently trading at 0.7322. We had PMI, manufacturing PMI out of New Zealand, which fell in June from the prior month, although it's worth mentioning that the prior month was a multi-month high. And oil prices oil prices have been rather mixed in recent days. Yesterday we had the OPEC report showing that compliance to the output deal fell to 78% in June, but this was somewhat offset by a drop in US inventories and signs of improving demand from China. It's down slightly. The US crude is currently trading at $45.88 a barrel. And a quick look at the Canadian dollar. We can see that after hitting that 30-month high on Wednesday, it did pull back a little bit, and it's been more or less steady since then, currently trading at 1.2738. We are seeing rising odds that the Bank of Canada will raise rates again later this year, most likely in October, following Wednesday's 25 basis points increase, which was the first move up since 2010. Looking at today's economic calendar, earlier today we saw a downward revision to Japanese industrial output for May. We've got Eurozone trade data coming out shortly, but the main focus will be on US data. We've got CPI, retail sales, industrial output, business inventories, and the University of Michigan preliminary consumer confidence reading for July. That's it from me. Thank you very much for watching, and have a great day.